So what I want you all to do as you're listening to this, figure out what your buy right criteria is. Figure out what it is. Do you want to syndicate deals? Do you want to JV on deals? Do you want to use creative financing on deals? I'd say yes to all of those. Figure out where your market is, because all different parts of markets in the United States are in different parts of the market cycle. Some may be in recessions, some may be expansion, some may be in hyper supply. Understand where that is. Look at pricing. Figure out what pricing is, and then ultimately figure out what your exit strategy is. Some of you out there may want to buy these assets, hold on to them for 2 or 3 years. If you're syndicating, then flip out and profit on them. Great. Understand what that strategy is and figure out and put it into your buy right criteria, and then start looking at assets, number of assets you can buy, unit mixes. Are they garden style apartments? Are they townhomes? Are they built to rent model? Whatever that looks like, you need to be crystal clear on it, formulate the plan, and then make sure it works in that part of in your market where you're investing in. It's really, really important. Figure out what your buy right criteria is.
Okay, so we have a 1980s build and that we're working on right now. It's a complete renovation, a complete gut. And then we have another one that's a 1970s, but it was better. It was more well-maintained, and that's a light reno. Everything else that we're buying, because these take up resources we internally manage, is 2014. We have another 2008, and then we have a 2000, which will be essentially light upgraded turns. So there's no bandwidth taken off the team. And we're buying land right now because we've been working for the last few years on the development. So basically, we've shifted to smaller mom and pop deals. Those range from 20 to 100 units. This doesn't mean that we won't take on a larger property. We just haven't seen the value recently. Even though we're underwriting these, we're putting in bids, we've come close a bunch of times. We just haven't closed any yet. So close but no cigar. All our recent deals have been done with in-house capital, no syndications. And the land, we touched on the land over the past 2 years, been working very hard in development. We're now sitting on over 120 acres, so very proud about that. And what I like to call climbing the ladder. It's crucial. Again, I said this in the opening. It's crucial that you know your rental comps, because we're having a hard time finding cash on cash from day one. So what does climbing the ladder look like? Gino touched on a little bit. Maybe you get into a deal for $80K per door and the rental rates are $600. That doesn't work really well. But the reposition rental rate is $900 to $1,000. So you got to climb that ladder. You're not going to get there from day one. It's going to be a year to get that property to where it needs to be. But it keeps the snowball rolling. It's cash flow, out in the future.